Hey everyone, Dan here. Today we're going to look at the VWAP and how that indicator can help you with sort of out-of-the-box, as simple as can be, support and resistance zones to look at to help your trading. If you enjoy these videos, please hit the like and subscribe button. It helps a lot. Also, a fraction of the people that watch these videos are subscribed, so if you find yourself frequently watching these videos anyway, please just hit the subscribe button and you'll get automatically notified, and it helps the channel a lot, and I appreciate it. Lastly, if you are on Twitter or Facebook or Reddit or wherever you share things socially and you want to share any of these videos that you find interesting, please do so. It also helps a ton. Alright, so VWAP is volume weighted average price. And a simple way to think about it is it basically tells you where the price and the volume overlap, meaning the more volume at any given price is going to be weighted in that direction. Less volume at any given price is going to be weighted away from that direction. So VWAP basically gives you support and resistance zones because the idea is that as there's more volume at the price point at which it is indicating at any given time, people are likely to either buy in if it's above the current price. So as it's down here, people are likely to buy in to build toward the price that the volume has driven it toward. Or if it's above the price, it's likely to, people are likely to take profit and have it come back down and fall back toward the VWAP itself. And so that's how it sort of like becomes resistance and support zones. So we're looking at Apple right now, and this is obviously in the middle of the trading day. And so as you see, the VWAP plays out in real time. So this won't happen, but if Apple were to just plummet and come down, we would expect it to hit the VWAP at whatever point it is at that time, and for the VWAP to provide some support, just as it did here. And then same thing. Let's see if we back it up to yesterday. Okay, so here you see it waffled back and forth early in the day, and then it came down below and resistance, tried again, resistance, and then the third time was the charm. It broke through, turned it into support, confirmed the support, and then took off. Okay, and then did well throughout the day, or throughout the overnight hours, and then opened up and kind of did the same thing. A quick test of the support, and then it has just taken off. So, one thing to watch for on the VWAP, besides just the easy out-of-the-box support and resistance zones that you can look for, is if the VWAP is kind of flattening out or if it's chasing, meaning you see how the price was spiking here and the VWAP was sort of chasing after it a bit. When you see that happening and it's sort of like keeping a reasonable distance between the price action and the VWAP itself, it is more likely that the price action is going to come down and test that support zone. If something like we see now is happening where there's increasing real estate between the VWAP and the price action, it's more likely that that price action is going to continue. I mean, this isn't the only factor, obviously, the VWAP, but it's more likely that this price action is going to continue, and that you're going to see that spread either widen or at least stay steady. If the VWAP starts to chase it up toward the price, then if the VWAP were up here, for example, and had closed all of this distance, then we would start to feel pretty confident, okay, it's probably going to come down and test that. And that could either give you one of two things. You could either say, okay, so I'm going to sell out now and lock in my profit because I'm assuming it's going to drop down to the VWAP. Or if you don't have a position and you've been watching this take place, or maybe you came in and you just are starting to see it now and you're like, crap, I missed all of this really good run, you could say, okay, well, if it comes down to the VWAP and bounces off of it as support, then that could give me a good dip buying opportunity. So let's say you had done that here this morning. You saw this run up and you're like, oh man, I've missed it. Well, you see the VWAP start chasing and you say, looks like they might be reconverging. Let me see what happens. There's no guarantee that once it comes down to the VWAP that it's going to bounce, but it is, like I said, sort of an out-of-the-box support zone that you can look for and see what the price does when it hits it. So if it were me, I would have seen the run, and I would have been like, oh crap, I'm missing the run. But wait a minute, the VWAP is kind of chasing it. And so let me see if they're going to collide. It comes down, it collides, and I'm like, okay, what's it going to do, what's it going to do, what's it going to do? And then it starts to build these initial like full candlesticks off of the VWAP, and that would give me some confidence that, oh, okay, it looks like it sort of confirmed the support and it's going to run up some more. And so that's when, you could take that, okay, this is, obviously I didn't catch it down here, so it goes, but this is my next best dip buying opportunity, and ride it up there. Now, obviously, you can use it also as a cut loss. So say you had say you had caught this initial run, and you had said, okay, so I caught it here, and then you're using the VWAP to as maybe a take profit or a cut loss zone, and you say, you sort of like panicked when you saw it dip below the VWAP here, and you sold out. That could be fine. I mean, you have to make your own rules as to what you're going to do. With me, I typically like to see a full candlestick or even two develop above or below the VWAP in order for me to say, okay, it is probably sort of confirming that it's going to stay above or below this, though even then, that's not like certainly not 100% of the time thing, probably not even an 80% of the time thing, but it's just a more often than not, that seems to go in my favor. So, sort of figure out those rules for yourself. If we pull out a little bit, say you were looking at something like the 30 minutes and you were trading off of that, you obviously see here, if you had bought in, for example, here, because this candlestick developed above the VWAP, and then you were riding it and staying above, and then I know that this is during pre-market, but it's okay if you have like brokers now allow you to trade after hours in pre-market, so you could have done it, but that could have been like your little take profit, and yes, would have been better to sell out here, but I mean, ultimately, you wouldn't have known this at the time, but it would have been better to just hold it, and now you'd be all the way up here. But this is sort of like the advantage and disadvantage of having rules and following them. So more often than not, it allows you to take some of the gains that you have and not turn gains into losses, but you're never going to catch 100% of every move. So it does mean that you're going to give up a little bit on the front end and on the back end, but the overall point is that you don't go around blowing up your account over and over and over again, because you turn gains into losses, or gains into like just flat trades. So you bought it at 130 and you sold it at 130. So the other way, I'm trying to see a good example here of a place. Okay, yeah. So, you could also use it as like a cut loss where, here, let's say you had bought in when this confirmed above here, and then you were trying to ride it up and you felt like you were looking pretty good, then all of a sudden it got slammed, and, you caught it like here when it was like developing the first full candlestick toward the bottom. You kind of, oh crap. So that would have cost you a little bit. Like say you bought in around 126 and you sold out, it would have just been pennies. So it's not that much. So that's also part of the idea of having these rules is, yes, it will take away some of your gains, but it will also limit your losses. So you may not have 100% gains all the time, but you won't have 100% losses either, which that's the real danger, right? That's sort of what causes people to kind of I don't know, like lose steam, fizzle out, and stop trading and sort of quit on themselves because they take too many losses that are too catastrophic and they don't have as exuberant of gains to offset those catastrophic losses. So just understand that if you don't catch all the upside, just make sure that you're not having to take all of the downside either. Limit your losses, lock in your profits, and the VWAP can help you do that. And definitely none of these are perfect, obviously, but you know, they help you. Some of them are sort of shortcuts. Like if you're just not good at drawing in support and resistance zones and you really struggle with it, you could just rely on the VWAP for a while until you get better or until you just learn how to play the VWAP and you're very happy with it. One thing that I will mention while we're looking at it, this is a 30-minute chart on Apple. You know, this really consistently comes to fill gaps. So just keep that in mind. You know, this gap was left here and it came down and filled it and even like filled it with some more volume there. And then this one up here, you know, by the time it opened, it immediately sprang up to fill the gap. So, you know, something to that probably if you want to keep an eye on that as an added bonus rule for Apple. Could be a frequent gap filler on something like the 30-minute or the hour even. Yeah, those show up on the hour also. All right, well, hopefully this helped you. You know, it's a bit of a shorter video, but the VWAP is just quite simple. Support, resistance, just kind of know what you're looking at. And oh, I was like, where'd the VWAP go? But it's just so far away. So as you see, it's starting to rise up toward it a little bit, but there's still so much space between here. Like there's still way more space here than there was back here, right? So so it's still sort of like expanding space between it. So we'll see what it does, but congrats if you happen to be in Apple today and caught this. All right, well, that'll do it for this video, and I will see you in the next one.